Let's stick with market reaction to those tariffs now. Manoj Mahadev is head of investments at Additum, Dubai-based asset manager with more than $7 billion under management. Manoj, good morning. Let's start first of all with just those stock market headlines that I mentioned. Asian markets all falling this morning by as much as 2.5% in reaction to the tariffs. In simple terms, talk us through that rationale.
Let's start with the tariff numbers. So on Canada and Mexico, Trump has imposed a 25%. The only exception is 10% on oil from Canada and 10% on China. So if you look at the economies, Canadian economy depends almost 15% and Mexican 15% on these tariffs. This means that the cost of goods into US on a weighted basis is almost over 10% purely on tariffs. If we move into protectionism, clearly it is going to impact cost of goods in US. Apparently, they estimate that the impact on households is anywhere going to be between $3,000 to $3,500 on an annual basis. Here, you have a situation where the Fed is trying to dial down rates, and you have a situation where inflation could pick up, and this could impact consumption. So, I mean, it's not surprising, and I'm sure President Trump has also indicated that he will impose tariffs on EU. So rest of the economies are clearly worried because if you move into protectionism, it will impact GDP substantially for the world. So, I mean, it's not surprising that the markets are low. The only exception I see is that I would have expected safe haven currencies to perform, but I'm seeing the dollar strength across the curve, including against yen and Swiss.
And Bitcoin plunging as well. But if we look at how you manage your portfolios, you've got $7 billion under your remit. That's a lot of money, Manoj. How did you position yourself ahead of this? What changes did you make to first of all, your global portfolios?
From an asset allocation perspective, we were extremely overweight fixed income. We think that Fed has several legs to go. So we believe that the Fed will cut rates by 3 times this year. So we were overweight fixed income. From the stock market perspective, we were expecting tariffs. To be fair, we were shocked at the timing of the tariff, but not the extent of tariff. So we remained underweight S&P. The only thing that we were caught off guard, if I may say, was the AI impact due to DeepSeek. We were also long gold. That's worked for us. At this moment in time, probably we will see the reaction, how it pans out in the next few days, because the time to change the tariffs is very short. We will again start entering markets, especially we are quite bullish on the AI in the US. So that's kind of the broad asset allocation.
Well, you make a good point there. There's just so much to digest. I saw a great quote from Jim Cramer of CNBC over the weekend. He said the following: when you get a week like this week that's packed with important earnings reports, we got Alphabet and Amazon, you've got the monthly jobs report on Friday and the tariff news, Jim Cramer says you're probably better off just sitting on your hands because there's just too much data for any individual to process. And DeepSeek as well. I mean, how do you juggle all of this, Manoj, you and your team?
So frankly, I use the word, has the coin dropped? Not really. At this moment in time, I'm trying to figure out what the puzzle looks like. The team is doing the same thing. Just a small thing on DeepSeek. I think it's a bit over-exaggerated. The way I see it is AI is not about chatbots, just a parlor trick. We are yet to get into the AI's paradigm shift. What is a paradigm shift? AI actually percolating into the economies, leading to what they call as productivity increase in manufacturing, virtual chemistries. So we are yet to see the power of AI. I mean, I think we're getting, I would use the word, we're getting our thoughts twisted because of DeepSeek. So I'll take a step back on DeepSeek. I don't want to waste time on that. But from a tariffs perspective, I want to see what the window looks like. And the jobs data, actually 2 points of the jobs data coming. One is called the JOLTS, which tells us how much of job openings is there in the US. And the second is the final number, which is called the non-farm payroll, which comes on Friday. We expect the numbers to be reasonably strong, printing about 150K, markets pricing 170K.
Okay, so what do we buy and what do we sell? You've mentioned in the notes that you sent me the car industry, the first to be impacted by tariffs. How do you as an asset manager play the auto industry and the automakers?
So from our perspective, the cost of car could increase by around $3,000. You have to remember that between Mexico, it's a nearshoring, right? So between Mexico and US, a car part literally travels almost 8 times. So look at the extent of duties. Luckily, GM, Stellantis, and of course Ford have already, they are aware of that probability of an tariffs coming in, so they have stacked up inventory. I think the impact will be probably felt after a month, and I hope by then this tariff issue would have been sorted out. At this moment in time, we had not taken a position in the auto industry because I don't think it can sustain because the transition between EV, non-EV, we still are not very clear on that. So we've stepped away from auto industry.
Okay, stepped away from the auto industry, but you say you expect big tech results to be broadly positive. So you do hold the Magnificent Seven, for example, or not?
Yeah, we do hold a Magnificent Seven, but unfortunately, NVIDIA has not worked for us. But we are not hassled by it because we think without NVIDIA chips, none of this AI productivity gains are ever going to come. So the only question we are watching for is we believe Amazon results, Google results are going to be a top line growth of anywhere between 8 to 12%. But what we are watching is the NVIDIA results, which comes closer to end of Feb. We want to see how much they've sold on their Blackwell. So the Blackwell chip is what we'll focus on.
Finally, in terms of local markets, you're based in Dubai, in DIFC. You do manage some local assets. How does the whole tariff story play into local stocks, DFM, ADX listed stocks, if at all?
I don't see the impact I see is quite minimal, but then you have a correlatory effect. When markets sell across the globe, you will have an impact on ADX, DFM, and of course the Tadawul. That's quite common. But if the tariffs continue, especially on the oil side, the Canadian, then what happens is normally oil is supposed to stay bid, which is a bit surprising. This morning, oil has kind of eased off. I expected a bit more stronger reaction in oil. I expected it to rise by about $2.5, $3, but that's not happened. And a rising oil obviously is a positive for these economies out here.
Very quickly, you mentioned gold there, touched a record high last week. It's above $2,800. How do you play that?
We think gold has a potential to head to 3,200. It's like a proxy safe haven, and if Fed is looking to dial down rates, I think gold is a great bet. I would choose gold over Bitcoin, but I'm not the Gen Z anyway, so I'm still the old.
Well, Bitcoin falling sharply this morning. It's down about 10%, $90,000 right now. Earnings season here in the UAE, as well as getting the Alphabets and the Amazon this week. We're also going to hear from some of the big UAE companies. How have you read earnings season in the UAE so far, and what do you expect? A quick word on that.
So I expect the banking sector to do exceedingly well, obviously driven by lower rates. And you can obviously see the growth. I mean, I'm preaching to the choir here in terms of the growth that we're seeing in UAE and KSA. So pretty strong results is what we anticipate.
Really appreciate you joining us, Manoj, this morning. Thanks very much indeed. The thoughts there.
Thanks,
Manoj Mahadev.
Cheers.
He's head of investment at Aditum, Dubai-based asset manager with $7 billion under management.
Dubai Eye 103.8.
Join the conversation.